because I'm supposed to be recording this. And I always forget to hit the stupid record button. Pardon me. Okay, so here we are. So the 18 countries again. They're right there for you. These are the 18 countries of the 28 in the Eurozone that use the euro as their official currency. All righty. Now, the Eurozone. So these, which comprises of about half the nations in the EU, ranks as the largest economy and has a GDP, and GDP stands for gross domestic product, of about 18.45 trillion. And it's mostly a services-oriented economy. And services account for about 70% of its GDP. So it's very heavy emphasis on services rather than actual products. Now, it's the second most attractive investment market for domestic and international investors. So basically, the whole world trades the euro. A lot of Americans, a lot of Europeans, a lot of Australians, a lot of anywhere in the world you are, a lot of Asians, no matter where you are, who you are. If you're a trader, especially in foreign exchange, you're trading the euro. The euro versus the USD is one of the most heavily traded currency pairs out there. Now, well, okay, Craig, that's a very large economy. Who manages all of that? Who makes the decisions about the euro and the Eurozone? Well, it's the European Central Bank, the ECB. And it's the governing body for the monetary policy of the EU. The current president is Mario Draghi, and the executive board also consists of the vice president and 4 other policymakers. Now, the euro and the Euro Union there has had a bit of a tough time as well recently. Their economy is very struggling right now, absolutely struggling. And that has worldwide effects. You see how big it is now? You understand who the countries are? Of the EU, probably Germany is the strongest country, I should say, in the EU economy-wise. And with that economy struggling, it leads to, for example, it affects us here in America because that means the Europeans are buying less American goods. And they're one of our main export targets. So when they're struggling, it affects us here locally as well because our countries sell less exports. And that's a problem for us here in the US. The whole world is connected now, really and truly is. Now, the main objective of the ECB is to maintain price stability in the entire region. Well, that's quite the goal, isn't it? Now, to achieve that goal, I don't want to get too detailed, but the Eurozone signed what's called the Maastricht Treaty, which means that every country in that European Union has to meet certain requirements. Well, what are they? Well, number one, the nation's inflation rate must not exceed the average inflation of the 3 best performing states by more than 1.5%. Their long-term interest rates must not exceed the average rates of the low inflation states by more than 2%. And here's the biggie. Their government deficit must be less than 3% of their gross domestic product. And gross domestic product is all the value of all the goods and services produced within one country. Now, you see the word Greece there. Greece violated that third requirement there. Their deficits were much, much higher than 3% of their GDPs. And their debt was way, way too high as well, and they were defaulting on their loans. So if you notice, if you paid attention just last week, the European Union reached an agreement because Greece was on the very, very edge of defaulting on all their loans and throwing that country into absolute chaos. And I mean, it would have been like Depression-era breadlines. It would have been crazy. Well, they reached an agreement just last week to extend their payback time, their loans, for another 4 months. So they're working on stabilizing Greece right now. But keep an eye on that because that could have huge effects, again, domestically. If Greece gets kicked out of the EU, what does that mean? Does that further weaken the EU? Does that cause more chaos? If the other EU members, including Germany, who has the most loans to Greece, doesn't get paid back, what happens to Germany now? So it can have a huge amount of ripple effects throughout the entire markets, not just the European Union, but worldwide. Not to mention also that if a nation fails to meet those conditions, they can be penalized with a hefty fine. And certainly Greece can't afford that right now. So these are the type of things that you really, really, really need to be paying attention to. And it's super important that you start to understand all of these things. Super important. Because these things affect you not only as a trader, as I said, but affects your pocketbook every single day. Not to mention your job also. If you have layoffs or downsizing, all these global events that you will have a handle on and understand, have a deep, intimate knowledge of, can help you not only in your finances, but in your job as well. All right. Now, as I touched on, currencies trade in pairs. It's a fundamental aspect of currency trading. Currencies trade in pairs. You're never trading just one currency. It won't be just the US dollar or just the euro. It'll be the euro versus the US dollar, or the Great British pound versus the Japanese yen, or the Canadian dollar versus the Japanese yen, so on and so forth. Now, each currency pair has two parts. The first currency listed is called the base currency, and the second currency listed is called the quote currency. Now, the currency pair shows how much of the quote currency is needed to purchase 1 unit of the base currency. Let's dig a little deeper here. Here you see we have the Australian dollar versus the US dollar currency pair. Now, the Australian dollar is listed first, the AUD. So that would be the base currency. And the base currency is always equal to the number 1. So 1 unit of that currency, in this case, 1 Australian dollar. The second currency listed is the US dollar. That would be the quote currency. And this price down here, oops, let me go back one. This price, this 0.9952, tells me how much of the quote currency. So how much of the US dollar does it take to equal 1 of the base, which in this case is the Australian dollar. So this is telling me that it takes 0.9952 of US money to equal 1 Australian dollar. So basically 99 cents US equals 1 Australian dollar in this example. And that's how we read the currency pair and the exchange rate. Now, over here on this currency pair, now we have the US dollar versus the Japanese yen. The US dollar versus the Japanese yen. Now this time the US dollar is listed first, so that's the base currency. And a base currency is always equal to 1. The Japanese yen is the second currency, and that's the quote currency. So what this tells me down here is that it takes 82.18 yen to equal 1 US dollar. So I can now glean from that price that the US dollar is much stronger than the Japanese yen because it takes 82 yen to equal 1 US dollar. Over here on the Australian dollar US dollar pair, I can also understand that the US dollar is stronger than the Australian dollar because it only takes 99 cents US to equal 1 Australian dollar. Now, don't worry if you didn't get all that, because it takes a little bit of working with that to get your mind around it. Because it's a little bit counterintuitive, and you have to understand, well, which currency listed first, which one is the base, which one is the quote. It takes a little bit of time to work with that to get it straight in your head. So don't worry if you didn't get it right now. Now, we also talk about PIPs, P-I-P, and that stands for price interest point. And that's how we measure how much profit or loss we have in any one trade. And a pip is represented by the smallest increment of movement for the pairs, which is the 5th digit of price. So coming back down here to the Australian dollar, if I count the 5th digit of price, so 1, 2, 3, 4, 5, I will start counting from this number 2 here to count how many pips I made. So if this went up by 5 pips, it would go from 0.9952 to 0.9957. And if I was trading that it was going up, then I just made 5 pips. And I get to choose how much money I'm risking per 1 pip of movement. It could be 10 cents, it could be 50 cents, it could be $1, $10, whatever amount you're trading in your account. Also, on the US dollar Japanese yen, once again, we have 1, 2, 3, 4, 5. So the fifth digit of price right there. We start counting from the 8. So if that price went up by 5 pips, it would go from 0.8218 to 0.8223. It's just that simple. It's always starting from the fifth digit of price. Now, what do we have? Well, if the Australian dollar, in this example, strengthens and the US dollar weakens, we'll see this price go up. We'll see this price increase because it's taking more US money to equal 1 Australian dollar. And why would the Australian dollar strengthen? Well, maybe they got good news. For example, in about 8 minutes here, we're going to see some news released on the Australian dollar, and we might very well see a trade here. Now, vice versa, if the Australian dollar got bad news and the US dollar strengthened against it, we would see a price decrease. Because there, the price would go down, so it's costing less money. It's costing less money, less US money to equal 1 Australian dollar there. So, what moves the market? Trading on economic strength, and that news we talked about is readily accessible. So where do we go to find that news? Well, there's a wonderful website that everyone here should be aware of. It's called FOREX Factory. I'm going to type it in here into your chat box. Everyone should be intimately knowledgeable about FOREX Factory because this site is a gold mine of information. It's wonderful. It gives us all of the important economic happenings, statistics, speeches, indicators, everything we need to know, and puts it all in one place for us on a daily, weekly, and then monthly basis. So we know exactly when these important numbers are being released, and we can plan and execute our trades based on what happens. So you see, right now, in about 6 minutes, we have the Australian GDP news coming out. This is 5:30 p.m. Mountain Time, and you can tailor this site to your particular time zone. So the Australian GDP numbers are coming out. Now you see over here, they are forecasting a 0.7% growth in that number. So the GDP, again, is gross domestic product, and it's the value of all goods and services produced in Australia for the last quarter of 2014. It's released quarterly. And how do I know that? Well, this gives us a nice handy little detail box right here. I can click on, and it tells me exactly that. The change in the inflation-adjusted value of all goods and services produced by the economy. Gross domestic product. Why is it important? It's the broadest measure of economic activity and the primary gauge of the economy's health. Wow, that's pretty darn important. And this is what we do in our private coaching sessions. We break down all of these important indicators, statistics, numbers that you need to be aware of, so you know exactly what's happening and why, worldwide and domestically. And that gives you a great opportunity, a great chance to be a responsible, consistent, profitable trader, and it helps you a great deal in your own finances, understanding what's happening. If you can understand these numbers, interpret them, and then use them to your advantage, that gives you a huge leg up over the untrained trader. I can't stress it enough. It's huge. So we'll see here in about 4 minutes now, this column right here, there'll be a number. That's the actual number. Will pop in this column right here. And I'll be able to compare it to the forecast. So they're forecasting a 0.7% growth in the last quarter of 2014 for the Australian economy. And we'll see the actual number pop in here in about 4 minutes. Now, why is that important? Well, you see now, I have a couple of trades already inputted on my charts here. And yes, Our clients get to watch our coaches trade live. You're looking at my real account right here. This is not a fake account. This is real money, a real account that I trade live with our students. In fact, we had a wonderful trade this morning on the Great British Pound Canadian dollar. We had a wonderful level of support right here. And this is just before the news announcement this morning. See a big move down here on the Great British Pound Canadian. And that's because we had news this morning on the Canadian dollar. The Canadian GDP was announced this morning. They were expecting a 0.2% growth. It came in higher than that. So the Canadian dollar got much stronger this morning. And that created this nice trade right here. So again, if you don't understand all this, don't worry. This is what we teach you to do in our private coaching sessions. Any questions? Stefan, what does the QQ mean where it says Australian GDP QQ? QQ means quarter on quarter, Stefan. Yes, so the last quarter of 2014. That's what it means. Very good question. All righty. So I'm looking at the Australian dollar, US dollar currency pair right here. And what I've done here is I put in a trade that if the news is good for the Australian dollar, I have a trade waiting for it. If the news is bad for the Australian dollar, I have a trade waiting for that as well. So I'm playing both sides of the coin here because I don't know what the news is going to be. I don't have any inside information about what the GDP is going to be for the Australian dollar, but it doesn't matter because all of these indicators, all these lines you see on here and the candlesticks and the indicator down here, these are what we teach our students to be able to interpret. This is called technical analysis. And learning these strategies, our students know exactly when to get into a trade without guessing, and they know exactly when to get out of a trade without guessing. You simply trade what you see on your screen. And that's what we do. We want to make you into a systematic trader, so you're not guessing or have any hunches. You have criterion that must be met for every trade, and if they're not met, you don't trade it. It's as simple as that. Systematic trading is the only way to be consistent and profitable trader. All righty. So we got about 1 minute here before this news comes out. So let's take a peek here and we'll see. Now sometimes the Australian news can be a little bit delayed. So I'm going to keep a close eye on this chart right now and see if we can't do a trade here for you. Let's take a look. So you see some movement already. If you're watching the far right-hand side of my chart here, you're seeing some movement even before the announcement comes out. These are people trying to get in early on the news. Okay, news is out. Wow, okay. So it triggered my trade here. Now it's moving down big time here. Okay, so this is moving down. So that tells me that the Australian got bad news. So I'm going to stick with it here and see if it can continue to push down. It's backing up on me a little bit. Let's go check and see if we got the actual news out here. Come on, give me the number. And now it's moving back up on me a little bit. Okay, it hasn't quite given me the number yet. Okay, so it is bad. So it did miss the forecast. It came in at 0.5%. So I'm going to be content and wait for this number to come back down for me because this is the Australian dollar US dollar currency pair. Okay, so what this means is as this price comes down, that's the US dollar getting stronger and the Australian getting weaker. So for reasons why I can't go into in detail right now, it's bouncing around a major support line. But that big of a miss on GDP, I'm highly confident that this number will continue to come back down, even though it's creeping up right now. This number should come back down and keep moving south when all said and done. So each candlestick you see here is about a 30-minute time frame, and that's okay. I'm expecting a little bit of volatility here, so it's moving up right now, but again, I'm perfectly content to wait this out, and this trade should eventually move in my favor. So I'm going to leave it in there. Now, I have a set level that if it continues to move against me, I will close the trade and accept the loss, because losses are part of trading. I've been trading for 20 plus years, and I'm fine with that. If you ever hear anybody say that, oh yes, our systems are 100% foolproof, you never lose a trade, please run, don't walk the other direction, because they're lying to you. Our goal for all of our students is to get them to about a 75 to 85% win ratio. If you can do that consistently and profitably, you will be a very, very happy trader. That's the goal for all of our students. And we don't make pie in the sky crazy promises. You see so much junk out there saying, oh my goodness, Craig, you know, come with this program or buy this software. You'll make 10,000 pips per month. Well, that's just crazy talk. Maybe 0.01% of traders can make that amount of money. All right? We have simple, achievable goals that we worked hard to do every single day with our clients. And we trade in the markets every single day with our clients. We have a live trading room where you will start off with a demo account where you'll be watching, you'll be trading the live market, but with demo account money, not real money. So you can learn how to trade in a live scenario without risking any money. And then once you show proficiency at that, then we can talk to you about, maybe you're ready to start opening up your own account and trade your own money. So that's the best way to do it. Learning by doing, understanding how to move the markets. That's the best way to trade. All right. Right now I'm down about 20 pips on this trade, but again, I'm not panicking because my charts and my technical analysis is telling me don't panic. It's going against you right now, but it should eventually go your way. So I'm going to leave that trade in there. I'm going to keep watching it for a couple hours. And again, can't guarantee anything, but I'm highly confident this will be a good trade for me in the long run. My goodness. The half an hour just flew past there. And I encourage you to watch that the Australian dollar, US dollar currency pair and see if I'm right. And I will talk about it on Thursday in our next webinar that we will do. And I'll be glad to, again, everything's 100% transparent here. If we have a bad trade, we show it. If we have a good trade, we show that as well, because we know that our winning percentage is very, very high. Okay, well, hopefully you learned something tonight. Didn't get too many questions, but the ones we did, I appreciate those. Remember, there are no bad questions. There are no stupid questions. So if you have any questions now, feel free to type them in. I'm going to take a quick break. I'm going to turn off the mics. But if you have a question, feel free to type them in. Topher is one of our sales people. So if he messages you, please respond to him. That's Topher. If you have any questions, you can ask me or Topher, and we'll spend the next 5 minutes here for you to get your questions in, and we'll come back and answer them, and then we'll end the webinar. All righty. Thank you so much for your time tonight, and hope to see you on Thursday. We hope to see you as clients, obviously. This stuff is so important. We do this because we love to trade. We love to educate people on the macro and microeconomic concepts that are so important as traders. And as individual, it affects you every single day, whether you realize it or not. It really does. So we hope you don't end up in that 4% we hope you don't end up in the 96% who retire dependent on family, charity, the government. Take the time, take the education. Trading is hard work. It's discipline. It's not just some get-rich-quick scheme. It will take hard work. You will have homework. You need to be coachable. You need to be really in there, learning how to trade. But if you can do that and apply the time and the effort, it can be a wonderful way to either augment or replace your income. That is a distinct possibility. It's not easy, but it's certainly a possibility if you're willing to apply yourself. And we will be here for you, holding your hands every step of the way. That's who we are. Thank you again. Have a great evening, and we will talk to you on Thursday.